my dance, make it hurt.
What's up, Relentless Traders? It's your host, Surreal.
And Juan, and welcome to episode 8. The chop don't stop. You like that?
Yeah, that's good.
There's not gonna be too long of an episode. Whereas there's not a ton to talk about. I only took one trade. Anything much on your end?
No, I just resting this week, kind of resetting. I tried to get away from the market this week, to be honest. I didn't really wake up for open or anything like that. Kind of just pull the indexes up during the day and had a couple stocks that I was checking. The main ones, Nvidia, AMD, kind of those were holding up in the previous rally, and I'm kind of been using those as like a temperature check um, and I think I was watching Microsoft and just kind of some of the larger caps just to kind of see how they're reacting. Um, and that's about it, really. I didn't trade this week, just kind of focusing on my mental capital and resting up and resetting.
Nice. I think that's really important because the name of the game is long term, as we will talk about here in a little bit. But at the end of the day, you have to preserve the mental capital, and if you're in a drawdown, you have to preserve the physical capital, and if you have to do that by stepping away for a little bit, I think it's important to do to just get that quick mental reset. But I guess without you going on too much, I will go over my week. I only had one trade, which I deem was really good. Let me switch over to my screen. It was Airbnb. This was a level I had been watching for it had been since like beginning of December, the 187.50 level. It's what I call key level or key level resistance in this case. I had been watching this level for a very long time. And Airbnb had been acting rather well after all that chop, all those drops started putting in, lower highs or sorry, higher lows, and higher highs over the past like week or two. And they had earnings. I believe this trade I took was yesterday or 2 days ago. It was the day after earnings. I don't like to trade the day before earnings. Premiums get really, really inflated, and the stock tends to play a lot of games going into earnings. So, I was thinking this was going to go on. This was going to kind of like gap up into a pre-market and kind of go without me. I was fine with that. It's not something that causes FOMO or anything for me. So I was just kind of watching it. It started fading through the morning. I believe futures were fading, and you can see this opened up in like the 178 area. I think this was up in the 185, 186 pre-market. It might have been even as high as like 191 at one point overnight. So this was something that I was just kind of watching. I wasn't expecting to take a trade on it because it opened up so beneath that key level. So what I did do was obviously I kept it on my screen. This was part of a couple of the tickers I was watching that day. And I was watching volume. I expected volume to be great because of earnings. And so I saw as soon as it opened up, it spiked really hard, even as the market was kind of selling off. It was kind of trudging lower there for a little bit. The market didn't really catch a bid for a bit. It started bouncing later on, and as it was kind of going lower, this kept making higher lows here on the intraday time frames, the 5 minute, and it started a little basing period, almost like a flagging period. And I took the trade at the 705 candle, actually towards that high, because I got a little bit, it started kind of doing a little volume expansion, and I fully expected this to go. I was keeping my stop here at VWAP, below VWAP, and it kind of respected that really well. Obviously, you can tell it didn't touch VWAP, and it put on a full range expansion right through that key level. I mean, premium spiked. I think this was like an 80% winner at one point. I think this tapped 100%, and came back in. I got out at the 820 820 candle right here. This was a, overall a really good trade. I was patient with it. I followed my plan. My goal isn't always to chase through these key levels. If I can see good, um, what in the invested trade group is called VVM, and like just a small shout out to them for always being a very supportive group. I've learned most of what I've learned from that group, from all the pro traders in there. Really good. It's important to have a small or even a large group of people that are very supportive when you're in this game,
Mhm.
especially because you can really gain from a lot of other people's experiences if you do it in the right way.
That's a focus group.
It
Yeah,
is a
it's
it's
yeah.
very important to have a focus group, and I've 100% found that with the invested trade group. So shout out to them for sure. So I definitely, I got into this trade, and this trade did not look back on me. I mean, I took it for 100% winner. My account's small. This was a really good win on my account. It was the only trade I took all week. I'm focusing on very specific setups, and
Can I
this
ask you a
one worked
question?
out. Yeah.
So I know we were working and talking about you working on holding your winners longer too. Do you think that focusing on things that you can do objectively with price action or methods for you to be able to hold longer, can you speak to that a little bit? Do you think that played a part in you identifying that you need to improve that
Yeah,
helped in this trade?
yeah, 100%. Over the past couple weeks, I've seen a couple of my trades go. I mean, really, I'll take the win on the premium spike, and then it'll keep going without me. The volume will be there, the price action, the momentum is there,
Mhm.
and this was, the past couple of trades I've been really trying to give this room. Typically, if I get a trend break, I'll exit. These premiums get a little bit hectic, especially towards the end of the week. Typically, I play the next week expiration when it's past Wednesday. If it's Thursday or Friday, I'll play next week's expiration. I don't like playing close to zero DT because any pullback is going to destroy premiums on option contracts. So I was really defending my position here. I don't want 100% winner to come back into 50%. That's dumb. You know what I'm saying? I'm not gonna give that
Yeah.
much gains up. Like that's not my goal, especially on one contract. Like I'll start when I start sizing up is when I'll start really selling into the strength, just to average those winners up. Um, but this
Let's
I
break that down for a second though.
yeah, yeah.
So, a couple things on that. I think too, like the portion of what you just said there too, where you were, when you said you're at 100% winner and you weren't going to let that come back into 50. Like, how do you feel about, and we've talked about this previously about that is like when you're recognizing when profits are on the table, like where to move that stop up to lock in a portion of that profit and then finance a piece of your, of your risk. Cause I remember that trade, I think we were on voice when you were in that trade.
Yes.
Um, and I was like, "Oh, you could backstop below that candle." And you're like, "Oh no, the contract's swinging too wide." So can you just speak to like, and this is like real right now. This is us talking and spitballing too, how we normally do, during
Oh
the
yeah,
day.
100%.
How do you feel about that? Like in that moment, like how can you explain kind of what you were thinking with in terms of like, okay, I have X amount of profit on the table, when the contract was at 100%.
Correct.
How were you looking or what were you looking to use to be able to, other than backstopping the value of the, like a certain value of the contract?
Yes.
Were you using anything technical or were you just
S-
backstopping based on an X amount of profit and
s-
saying, I'll risk whatever's on top to try and get more?
It was a little bit of both. Typically, I don't like to see these. I like to see these consolidation periods. I knew at this point, once it had ripped to the key level, it started getting a little extended. I wanted to see some sort of like non-volatile contraction period, like some sort of flagging period.
Hmm.
That when the volatility dies down, the premiums tend to really settle. As this thing was ripping, I mean, the premiums were spiking $20, $30 and coming back in 15, $20. It was it was
Uh,
it was
you're
really
getting your
Yeah,
Yeah,
it's
a
and
huge spike.
because people for that reason, people are really like pouring into these contracts when they see the move starting to happen, right? So,
Makes sense. Yeah.
it becomes really volatile. So like even as it was going through my key level, like I bought towards the top of the wick at 705, and when it started coming back in, I was under like 20-30 bucks. Not
Hmm.
much. The percentage wasn't much. I was under like maybe 15-20% on the contract. And then once it ripped through the key level, I think the contract went to like 25-30%. And then on any pullback, it was coming in 5 to 10%. And
Hmm.
I was like, okay, it's starting to get a little volatile. It was Wednesday. I remember this was Wednesday. I played Friday expiration, and that's really my line, my fine line in the sand for expiration. Um,
Because of the volatility.
exactly. So because any pullback, if you play something like that on Wednesday, any pullback, any one candle pullback is going to take me right back to entry price.
Hmm.
Um,
So you got to walk a really fine line
Egg
on those, and you want to use those spikes of liquidity as your potential. And this is like, I'm probing you too. Like this is how we, for the listeners, like when we're in voice during the day and we come across these things, I like to talk with Juan and we talk it out because like good information comes up.
Yep.
And so like for me hearing this from you right now too, my mind immediately thinks of, okay, how can I use that as an opportunity or even a potential like maybe topping signal for that for your time frame, which is scalping. So like I would think if I saw that like spike and over that key level, that key level is essentially key, no pun intended there. But
Mhm.
when you see that, what are you thinking when you see that volatility spiking? Are you thinking like, oh, this is like, if I have a good profit on the table, this is it, like strength right here,
Yeah.
especially when you have multiple contracts. I know you're trading on one now, so it makes it really hard because you get one shot to enter, one shot to exit. But later on when you start scaling up and you have multiple contracts, I could see that as maybe a potential exit strategy for you to trim like 50% of the position or 80% of the position off into good strength, and then kind of backstopping or something like that. Do you feel like that might be something
It's
that
a
you
it's
could use?
100%. It's 100% something I would use. Those spikes through those key levels, that volatility, that momentum, that volume as it's pushing through. Those premiums, because you got to understand the options market. It moves in tandem with the underlying stock, but it's its own market altogether. So as people are really pouring into these contracts, these premiums are getting really inflated. These
Hmm.
premiums are spiking, and so that's really what you want to see. That's why I want to look for that momentum, that volatility, right? Because that to me means I'm going to get a really nice premium spike, and that's where I can start. Definitely I would like to trim because a lot of these trades I'm treating as scalps. A lot of this you can see. I mean, we used to have follow through. Back when I started trading, there used to be follow through. As soon as it would break through a kilo, this thing would go 195, $200, $200 by the end of the day. Now it's going $4 or $5 above, and it's coming back in because the market's been really weird and really weak altogether.
That's
So
good situational. That's perfect example of situational awareness and adapting to, because that's you're essentially exploiting, you're being aware of the conditions and you're exploiting that as an edge because once it peaks above that key level, what are the chances of a breakout really following through, and you're essentially using that liquidity as selling into that strength because it looks like a big green candle above this key level, but there's probably higher chances that that candle is going to wick back below that key level. So when you see that big green, when you see that volatility spike in your contract, to me that's like, oh, they're like,
yeah,
either moving the stop up quickly or hitting that market sell button, at the height of that spike. Because it's almost like, if you think about it, it's almost literally a guarantee when you see that strength. You know what I mean?
yeah,
Like
one hundred
getting that
percent.
tight risk entry below the key level, and if it starts moving quick to that key level and it pokes its head up hard and fast through that level, like that's a guarantee secured profit into strength. If you think about it in this market environment.
Yeah, and that's exactly it's a lot. It's a conversation we've also had in the other group, in the investor trade group, for the people who are only doing the one contract at a time,
Hmm.
who are working on the consistency, growing their accounts, and whatnot. And people are like, you can't hold for the whole move. It's like, of course you can't hold for the whole move. You have one contract. You need those premium spikes so you could sell into the strength. If you have two,
Yeah.
three, four contracts on, yeah, Sell 75% of your position into that volatile move upward.
That
Yep.
guaranteed, not that it's guaranteed that it's going to happen before it happens, but when it's on your screen and the price is there, I think a lot of traders, and it comes for me, it was greed. Not when I would be in a trade and I'd be like, especially an intraday trade, I'm like, oh my God, like, and you see it moving, that initial after you get the entry, right? And you're in, and the trade starts working, and then it really starts working. Everybody's been in one of those trades where it really starts running
Yeah.
and you're wanting to screenshot it. That's, think of that moment. And at that moment, a lot of newer people are not like looking to sell. But I feel like if traders use that strength, that moment where you want to take a screenshot or something, especially when it happens really fast and it's really hard, peeling the position off. And a lot of pro traders, I found they sell, half their position or 80% of their position, especially if it's oversized, into that quick move, because I want a for sure profit. This is me talking too. It's like, that's for sure. It's on my screen right now.
Yeah.
It's my money. The strength is there. Peel the position. Take, if it's especially, it should be a multiple of your risk. First off, we've
Yeah.
talked about that. But, I think if, especially in these market conditions where you can't, the volatility up or down, no one knows which way it's going. So if you get a good entry and a good trade and you're above, 2R, like, peel that position off, especially if you have, some size, multiple contracts or multiple
Yeah,
shares.
protect the rest of your position. Like there's no
Yeah, take
reason
that
not to.
profit in
And
this
and
market environment.
and then
Yeah.
like that you can hold for a bigger move, right? Cuz you can say, "Okay, my contract has just hit 80%. Let me backstop at, 40%, which is still above my average. Like that's my average sale. My average sale is like 37-40% on my winners. So let me backstop at my average win, right? I'm not giving up a lot of, but then if it's gonna give me any form of like consolidation or some VCP pattern some sort before it makes another move upward, then it's going to. If it starts coming back in, then I can just sell it for higher than 40% or something. You know what I'm saying? And then
Hmm.
really, but if it's gonna consolidate and continue to move up, if it's going to give me some clues of that, then it's going to do it constructively. It's not going to come back in on heavy volume or
Yeah.
break the trend or anything like that.
Uh-huh.
And then at that point, you
Recognizing the.
exactly.
Hmm.
And that's what I've been using for my one contract is recognizing the trend. Is the trend like are the candles showing me strength? And I've been doing the 5 and 15 minute now. That's exactly what I did for Airbnb. As soon as it started going through my kilo, I just switched to the 15 minute, and I said, are the candles showing me strength? Because on the 5 minute, you can start seeing some of these candles come in red, and you're like, oh man. But if you look on the 15 minute, it's still a really strong candle on really heavy volume. It's like there's
Yep.
no reason to sell it yet. You know what I'm saying? And then you
Could
start
be
get
just a slight wick on the 15 on the like, could be a big green candle like we're talking about earlier this week.
yeah.
Like at 5 minutes, like, oh my God, it's a red candle. Filter the 15, and it's like, oh, it's just a slight bit of wick on the 15, but this green candle's, it closes up here, and the next 15 opens. Those are the characteristics that we were looking at this week too, of like how to squeeze more out of the trade and not let a little little smaller time frame pullback knock you out of a strong, you get 3 4 big 15-minute candles,
Yeah, I mean, you know what you start your eyes start going to where like where something's extended, and it could start consolidating or it'll come back in, and that's when you can start making decisions on your position.
And
Um,
these are really good points too for people that are listening. Like, listen to, like, go back and listen to what we're talking about here. It's very like specific things that we're looking for. Like, becoming a better trader is like building a house. You do it brick by brick. And this is, the more you understand the bigger picture stuff, not necessarily like macro type stuff, but like things of basic things like trend, like higher high, higher low, like whatever you're using. If you're using VWAP, is price above VWAP? Is it below? If you're using moving averages, do you have, are they above the moving averages and it's trending up? Once you get past that larger basic type fundamental stuff, then you start getting into the nitty gritty of like, well, in real time, this 15-minute candle, was red, but then it flipped green. And then you start thinking how the 15 or the lower time frame plays into the higher time frame. How did the 5 minute look? What was it kind of looking? And then how did that look, filtering to the 15? Once you get in a good trade, if you're looking for a good size move, well, you wouldn't want to let a pullback on a 5 minute knock you out. And so these are the kind of things that you progressively just, once you get the bigger things down, you really got to dig into the nuance and go candle by candle
Mhm.
and see how that plays into multiple time frames. And you're really what you're trying to do is you're trying to build the experience to hold your winners longer, and you're looking for characteristics or reasons to cut your losers quickly, and so you can build on that by really, especially if you have a fellow trader. That's how me and Juan do it. We talk things out and we say, if Juan has a good trade, sometimes I'll press Juan. I'll be like, that's great. That's awesome, man. But like, tell me a way you could have made it better or made more profit out of that.
Yep.
And like, we try and push each other to get better. It's not like putting each other down. Like, I praise him when he has a good trade, and same thing. Or like, even when I have a bad trade, Juan's there to pick me up. Like last podcast episode, you know what I mean? Like, he's like, you'll shake it off. You're a good trader. You'll make it back easily, just get back and focus. And so I think having a partner or a group that can do that for you is important. And then also people to challenge you too, to really to know your setup in depth, like the nuance stuff, because that's really how mastery is earned, is knowing the nitty gritty stuff. And you and me always try and push each other to look at, because, sometimes we look at things in a different light, or we, find new ideas.
Yeah, and those are always translatable. And as long as the group is supportive, and that's the most important part, you
Hmm.
have to have like a supportive individual or supportive couple people to be there, and not to criticize. It's structured criticism is what I'll call it,
Hmm.
because the trade was good. The trade was good on your end, or the trade was bad, because you'll know the difference of both. If you're a very aware and astute trader, you're gonna know the difference if you took a good trade or if you took a bad trade, and you're
Even
gonna
if you
know
won
why.
money,
Exactly.
it could have been a bad trade. Even if you won money, it could have still
Exactly.
been a
And
bad trade.
so there should be, or it's very constructive to have somebody there to be like, okay, why was it a bad trade, and how could we have bettered it? Because if you hear it from somebody else, sometimes it'll click a lot better than, in your head, because in your
100%.
in your head you're gonna almost delve into like, oh, it was okay because it worked out. It's like, nah, it wasn't, you
Hmm.
know? So
Hmm.
I think that's very important. But overall,
Or you could have, yeah, or
yeah,
you could have done better. I mean, to be honest, like I think personally, like seeing from where you came from before, when you would get those 20% winners, those 25, and like I wanted to push you because I could see, like, from me looking at you, I could see you're a very risk adverse person, when you first started out trading too, and you still are. But now, because like because of this experience you've gained, and we started looking at different things together of like, how can we like hold our winners longer, or like what, and we found little ways. And now here you are this week nailing 100% trade, like it's nothing. You know what I mean?
yeah,
Like, I know you were happy about it, but you were pretty neutral, which is good. I got to
yeah,
keep that. But really, like, like that's awesome, man. Like, congratulations on that, because I know you've been working hard to put yourself in this position, and you finally nailed one. And so
yeah,
now it's just more experience, because once you've done it once, you go back and look at that trade and look at the characteristics. This is why I did this. This is what this candle looked like. And then think of what are the probabilities now of when you get into another trade like this, that you're going to be able to squeeze out more of those profits, just like you
yeah,
did with this one. And then it becomes clear how people get better. You know what I mean? Like, you're just going to be able to expose yourself and be able to actually execute these types of trades more often now. When they're on the table, that
yeah,
is. We
hundred
never
percent.
know, but that's awesome, man. Congratulations. Like, I'm proud of you, dude, that you finally nailed 100%er like that.
I
And
know. I was super excited, super stoked. That was definitely it was my first one.
Mhm.
I'm not like as we all know, I'm a very new trader. But I have been very focused since I started. For the most part, I've had my ups and downs, but as of late, I've been super, super focused. I know this is something I want to do long term, and I'm treating this as I would treat something a career. As a
Yeah.
business. So we have a lot to look forward to in the future.
Yeah, we can just go into the topic too. I know we kind of just touched on some trading stuff, but like, I think to me, since last week when I took that big loss and I did some damage to my account, like, I really had to. I was like, I want to take a break, because I was doing some intraday trading, and I'm a swing trader by nature. That's what I'm looking to hold for multiple days or weeks. But when the market's not trending and it's choppy, and stocks are not, growth stocks are not favorable, or just trending stocks in general, and the market's unhealthy for swing trading, like, for me, it really made me reflect this past week. Like, taking a break. Like I'm still keeping up with charts and stuff,
Mhm.
but I really did a lot of reflection this past week. I didn't make any trades, and I just thought about like what is trading going to be to me, because I know it's something that I want to do for the rest of my life, because I think it is a life skill. It's a life skill that anyone could have. Just like if if you went and learned a trade like electrical work or plumbing, and say you're never, say you're not always going to be like electrician for the rest of your life, but
Yeah.
there's general skills within that you're going to be able to have for the rest of your life. You're going to be able to fix stuff around your house, or go help a friend, fix some electrical stuff at their house or whatever. Maybe a crude example,
Yeah.
but it's like anything with any job you do, you're going to gain some skills from it that are going to benefit you in your life. They may plug into other jobs that you may do or whatever. Trading is just, it's a life skill that if you learn and you can somehow you don't have to be extreme like some of these people, be a full-time trader. And a lot of people think that they're going to start out and they're going to just be full-time traders, and then the market, like right now, the past month, is going to teach them some hard lessons.
Mm.
And so for me, my aspirations were to be a full-time trader, but honestly, I'm really happy that I have a job, like even though I may not fully like my job or something like that, but I have the ability to like leverage trading with what I, with my regular job. And so I was putting a lot of pressure on myself, and I think I really want to put less pressure on me with feeling like I need to be this huge big trader. Like I know that's going to counteract what a lot of other really highly successful traders will say, but for me in my life, I don't think anyone should attach happiness to the markets, because that's where you're going to get the ebb and flow with your P&L,
Yep.
and you're going to be really depressed when you're in a slump, and you're going to be, and then you're going to be really happy and want to work hard when you're doing well, and you can't think like that. So attaching happiness to the market, I think, is a big, was something I realized this past week. And that, hey, it's a marathon, it's not going to be a sprint, and this is something that I want to work really hard on, but it's not going to be my rock, right? It's not going to be where all my happiness comes from.
Yeah.
It's just something that I can use when I get good at to change my life, and that's what I want to work for, because I want to, if you think about it, if I just attach all my happiness, I'm going to get burnt out so fast, like that mental capital we always talk about.
Yeah. And that's why people don't last on the market, right? You see it so often, and I've seen it so often in the short time I've been in the market and on, FinTwit and all that. Everybody, people who come into the market, it's like, oh, I quit my job because I made this amount in 2020 or 2021. It's like, oh, that's sick. And it's like, where are they now? You know what I'm
Yeah.
saying? It's like,
Either burned out because they lost that physical capital, or the market just chopped them alive and they just couldn't
yeah.
take it anymore if they were lucky enough to keep their money.
Exactly, and so that's the thing that a lot of people come into the market. It's like, oh, easy money, just buy low, sell high. It's like, that's what you think, right? It's like that's not how it is at the end of the day, and
We're
we
seeing that right
we
now.
are seeing that right now, and it's only the strong traders are going to survive in a market environment like this. And it's very important to have a set plan, set goals, and not be unrealistic about them.
Hmm.
You can't
Yeah.
come in and say, I want to be a 6 7 figure trader in 1 year.
Hmm.
No, in 1 year I want to have a rule book that I'm consistently following, and
Hmm.
I want to be journaling every day, and just I want to have maybe a group of people I trade with consistently.
Yeah, procedural goals like we've talked about. I
Exactly.
think you can say those things like, "Oh, I want to be an eight-figure trader." Like I have a flashcard on my desk that says eight-figure consistently profitable trader, and it's got like it's got some inspirational stuff on the back. But like that's my goal in the long run, right?
Yeah.
Like that is my goal for trading. But it's not a goal in a sense of it's an expectation, because that's where a lot of the pressure came from. But now, after reading more books, just general books like Atomic Habits, and like there was another game, Mental Game of Trading. Like they talk about, there were things in there about like with goals and systems, that's where your goals need to come from. But like goals in a sense of like saying, I want to be this big, huge trader with all this money. That's like, you need to look at that as an aspiration and not an expectation, because coming back to happiness, when you finally reach that goal, it's almost setting yourself up. When it's an expectation, you expected it, and therefore you're not going to reward yourself. There's not going to be happiness. when you get there. So you're kind of just going to be miserable the whole time in my and you know in my eyes.
Yeah.
And so, but saying, hey, I would aspire, every day I want to aspire to be this 8-figure consistently profitable trader, but here are my procedural goals, like you perfect examples you just gave. That's how like the goals where you want to focus on those things, because when you're focusing on the process and that system, that's going to actually be the plan to get you, to the aspiration.
Yeah. I think it's very important to like you said, just have all those structures down, and really know why it is that you're in the market. Is it
Hmm.
just for money, or are
Yeah.
you here because you enjoy trading? You know what I'm saying?
Hmm.
Like that's two very different things, and one of them I can guarantee you is going to keep you in the game longer than the other one.
Yeah. Yeah, knowing the reasons. Yeah, knowing your main reasons. A lot of people come, and just like all of us, like me and Juan, like we're here definitely for the money. I mean, no one's gonna not say they're gonna give the money. But I think the difference is we hit that point where we're like, oh my God, this is so, everyone has those days where you're just like, especially in the beginning where you just information overload and you can't even see the chessboard, right? Like you don't even know that there's a game there to be played. Like
Yep.
you know that but it's like you can't even see the spaces on the chessboard. It's like you don't even see the board at all when you first start out because there's so many ways to skin the market. But as you learn and progress, there has to be something deeper that you attach yourself to get through all that. Just the money is not. You're gonna have to consistently lose money for a minute till you
Yeah.
find a trading strategy, and then learn it and then finally master it eventually. It's going to take it's going to take years, but I mean, yeah, obviously if you work harder and you're consistent and did it, but burnout is a real thing. I was that guy last year who was reading and working every day and holding down a full-time job, and like, dude, like literally I was having, I was having a mental breakdown. I was just putting way too much pressure on myself.
Yeah.
So I think realizing and being real with myself where I'm at and where I want to, like, 10 years from now, where am I going to be with trading? Like I know I'm going to be trading 10 years from now, but the question is like, it's literally a marathon, right? I can't, and taking this past week off has been great because the market's been shit anyways. What am I going to do? Even if I was day trading, the liquidity is just dried up. It's just, there's no trend.
Yeah.
It's down 1 minute, it's up the next. And where I'm at, I don't have a full, for sure, set in stone intraday tactic right now. So I'm like, I'm better at swing trading, so why am I going to do more damage to myself and force, myself to look at charts all day and stare every tick? That's not constructive for who
No,
I am as a trader.
it
So you
isn't.
really got to focus in, on what you're trying to do and what you want to get out of the market and where you're at. Everybody's at a different spot in life right now. Maybe day trading's for you and that's what you want to focus on and you need to be on the charts. That's cool. Like for me, it's swing trading is my main focus. And I would love to use intraday trades as a complementary thing for market conditions that we're in, such as now.
Yep.
But I'm not gonna kill myself right now for that. I'm trying to learn swing trading harder, and so that's everybody's gonna be at a different point. And even when you master that, you're gonna want to maybe scale your trading up later, and you're gonna have to learn a different portion of the game because there may be factors where you can't trade the strategy or the certain stocks that you used to trade because you're so much bigger. So you're gonna have to learn a different portion of the game. There's just so many variables to this. It's insane.
That's gonna be ever changing, and
Yeah,
you're never gonna stop learning. I think that's
never.
the most important,
So
takeaway of the
don't burn
market.
yourself out. Yeah, don't burn, like, work hard, I get it, but also give yourself a break and really keep an achievement journal too. Like me, like, do you do that one? You keep an achievement
I do
journal? Or do you
not
just kind of
actually. No, I should start
yeah.
doing it.
Yeah, I bought, me, I have a couple journals on my desk, but I keep an achievement journal in it. Like I revisit it every now and then just to remind myself of where I'm at because it's hard to zoom out and kind of say, "Oh, like remember, oh, only a year ago like I didn't even have a strategy, but now even though I've learned some setups and I'm like more focused, even though the P&L isn't showing, but like really, appreciate where you're at in your journey and how you're going to keep pushing forward and stack those small successes to, as another source to keep you moving, keep
Mm.
you going and growing and evolving.
Yep.
Um, and yeah, and then I think educational goals too. That was the last thing we wanted to talk about. Kind of ties into the procedural goals.
Yeah.
Do you have any points on that?
I think for me, a big thing with the market has been books.
Mhm.
Really, picking up quality books and reading them. It's been so good for my just mental health in the market, I would say.
Mhm.
The Daily Trading Coach, the Mental Game of Trading.
Mhm.
I forget the name of Mark Minervini's book, just right off the
Uh,
top of my head.
Mindset
The Yep,
Secrets for Winning.
the Mindset Secrets for Winning book, all those are they've been so key in like just, a huge factor in being able to like, see the market objectively.
Mhm.
Um and not really focus or nitpick like the little things that I believe could or couldn't work, just really take a step back and like breathe in what the market is.
Yeah. Yeah. I agree. Yeah, books are great, especially if you're having tough time in your trading. It's okay to take a week off or 2 weeks off to reset because I've seen this in life too with a lot of things. Like when I hit a plateau in something, if you kind of give yourself a break from it and then when you come back, you might find yourself at a different level. Like you just somehow, stepping away out of that like vacuum, that serious traders find themselves in, where you're just consumed by books or podcasts or YouTube videos or discords and Twitter. And like that's at least been my life the past year. And so taking a step back from the market and kind of just doing other things and finding a little bit more balance, I think, may be able to help some people too. If you found yourself plateaued, kind of let yourself reset and then come back and with some fresh eyes, and set goals for yourself to read books or, really pick a piece of your trading out and focus on that to study it and learn it. Um, but having educational goals goes into that procedural goal aspect as well, because you have to have a plan for your growth. You can't just, if you're just learning by doing trading, I'm sorry, that's a really inefficient way of learning. Like
Yeah.
you're going trial and error in real time. And if you're not back testing or, picking pieces of your trading to study and get better at, you're just prolonging your learning curve.
Yep. But I think we covered a good tidbit of information there for sure. I thought it was going to be a
Yeah,
shorter one, but it's about the same.
that's okay. We got a lot of good points in. Um, Anything else you want to close us out with, or?
I don't think so. Honestly, I think just gonna see where everything takes us from here on out, and kind of just take it step by step, week by week. It's a process. It's a learning process, and it's gonna be a big one. So
Yeah.
prepare myself for it.
Yeah, me too. All right, guys. Thanks for listening. As always, remember, manage your risk, stay focused, and be relentless. We'll see you next week.
See ya.